Aye. Well, what a day we're going to have today. We have a little bit of a ramble and a bit of a rant. And then I'm going to answer a question about the DAX trade that I took on Friday. So let's roll the intro. I'll tell you all about it. Hi. If you haven't been here before, my name is Langers and I am the Scruffy Trader. And today is not only trying to put trading in the real world, which is something I'm trying to achieve with the channel. I'm going to address a couple of emails that I've had this weekend. In fact, I've had numerous emails this weekend. And then I'm going to have a little bit of a chat about a trade that I took on the DAX on Friday because some good questions came in regarding it, and they didn't quite understand why I didn't take a major drop, so I'm going to explain that as well. But first of all, I'm having a rant, and it's a little rant. It's not overly bad, but it could be construed that way, and it's just, I want to clarify a couple of things. I am getting asked constantly via email for me to teach. It's not something I want to do. All right. When I decline, I then get a torrent of abuse. All right. Then they call me all sorts, and some it's like quite subtle, others is just straight to the point, calling me God knows what. All right. And it's getting tedious. And I got an email this weekend, and it kind of was reminiscent of something that happened a little while back where I had a mega rant, and I'll drop that mega rant in the description below. And it was about the way that I trade, and something triggered on it that made me think, hold on a second here, I've heard this before. I don't show my strength meter anymore. And the reason why I don't show it is because it's dangerous. It has nothing to do with trading, and it's not something I can teach somebody because it's the way I interpret it. And trading is personal interpretation of the markets. When you look at fund managers, none of them trade the same. They are told the basics, then they develop their own style, and they trade it. And as you saw in the risk reward video that I did, it's about win rates, and I'm going to touch on that as well. It's all about your personality and how you can do it. I have an active personality, so I need a high win rate, so I need that 90-80% that I do, but I also understand what the reward is, so I have it balanced out. But then you could have a passive person who couldn't give a monkeys and deals at a 40% win rate, but has a higher return. We both earn similar money, but we have different ways of taking it. But we both read the charts in a similar way. Okay? So when I get an email like this, and as you see, I kind of answered it politely and one thing and another, but I made it pretty clear I am not into doing teaching, because I'm not. It's not something I want to do. All right. And that was reminiscent of the mega rant. And funny enough, I hope the guy who was involved in that mega rant still watches these, because there is no amount of money I will ever take to teach you how to trade. Because if that's the way that you treat people publicly, I'd hate to think what you're doing privately. So, no. Right. So that ends that altogether. But it also ends the other clowns out there that have had a go at me this weekend. All right. And what I'm getting at is, if I throw something out, I'm not really looking for anything in return. I'm really not. So to me, it's not up for an argument or abuse. If you get something and you have some knowledge from the videos that I do, fantastic. But don't blame me for your own failings, which is what's happening. People are trying to emulate what I do. fail and then blame me. And I'm thinking to myself, but I haven't shown you what I do. I just try and give you some inspiration to show that in this world of fakes,
you ding dong,
a normal guy can make it. But the way that you make it is by having self-discipline. I don't look at the markets the way most people do. Now, I look at the markets as a business, and I treat it like a business. And as such, I get a decent reward for the hard work that I put in. And I do get asked from time to time from other business owners if I will help them. One, I've been in business 20 years and I know a thing or two about how to make a profit. I had a chap, good guy from Leeds, prominent businessman, wanted to sit with me one-to-one, very similar to that email. And his offer was he wanted me to come down to Leeds, he put me up in a nice hotel, and he wanted to spend 2 days with me going through what I do and how I do it. And I could write my own ticket. And I declined. And he didn't understand. And then I explained why I didn't want to do it, because I'm not an educator and I don't want the responsibility. He understood it. He upped his offer to literally anything I could want. And it was greater than the figures I'm going to show you. And I still declined. Because it was unfair. I know how I trade is pretty unique. I am not in the same vein as these educators you see on YouTube. The reason why they're all slimy and coming over you, you've got, let's have a thing. You've got the wobbly trader, repackaged an old thing, said it was his, and then sells it at a premium. No, that is unfair, right? Because it's not his to sell, all right? You have fuckwit lifestyles, selling a signal service he has no concept of, and if you ask him what an RSI is, he doesn't know. So again, he's selling something that hasn't a value. Okay? Then you've got over in America, and he pops up all the time on mine. Team, I will take your pips to pay my bills. I just want to put my foot through the telly every time it comes on, because it's just an act. And I've spoken to people that have been in that stupid IML thing that he was peddling. And he teaches them nothing. He just wants a subscription fee. But he, very cinematic, you know. And the day that I become one of them is the day I will jump off Tyne Bridge. So I'll go back to how I treat it as a business. When you have a business and you decide that you want to sell your skill, it has a value. And if you give it away for free, it has no value. Alright? So there's no way I will ever give out everything that I do free. You know, that is just the lazy way out, and it's not enriching anybody's life. If anything, I would damage somebody's life, because I trade in a very strange way. Okay? And it's taken me over 15 years and north of £250,000 worth of education to get here. And when I get an email like I just had asking for it at around £250, that I'm afraid is insulting. Okay? And I respectfully decline. Okay? But if you're to sell a business, most people in the street have got no concept of how a business is calculated for sale. There are a couple of ways that you can price it out. It's very difficult to put a price on a business. The easiest way, if you have a tangible product, say you're selling a supermarket or a car lot or something like that, it would be your asset less its liability. So if you have assets worth 100,000, but you have loans and liabilities against it worth 50,000, that's 50,000 in the pot. Okay, one remove the other by 3 years profit. Okay, and if you made 50,000 a year, that bill of sale will be 200,000. Okay, so that's an easy way to price out a building. if you own a physical sort of entity. If you have a digital entity, it still has value, and it can be based on its expectation over the next number of years. And the easiest way to do it is it's 3 times the average profit. Okay, so if you make 15 grand a year off it, you would sell that for £45,000 plus a 20% goodwill payment. That's another way of doing it. So I'm going to calculate what I think my business is worth, and it was resonated with the businessman who contacted me without the 20% goodwill payment, and based on a bid size that is in reality to a normal man. And you'll see exactly how much my business is worth. So let's work this out. Very, very simple to do. As I've just told you about the way that you work the cost of a business out, this is my business. This is how much it's worth. We saw on my win rate. So from there, you can see that I take around 50 trades per month. Okay. Now I work probably about 11 months of the year because I have a couple of weeks off, Christmas, all that sort of thing, and then a couple of weeks in the summer for holidays. Not at the minute because we're all in lockdown. God, I need a holiday. So the maths would be this. Very, very simple. So let's pull my calculator up. So it's 11 times 50 gives me 550 trades a year. We know that for every 100 trades taken based on this, that is my profit on a £5 bid, which is in the realms of possibility to the normal man. Okay. So what I'm going to do is I'm going to assume that's only 500 trades, so it's actually less. All right. So it'll be 5 times that figure. 1, 2, 7, 3, 8. That is how much what I do is worth. So maybe you can see why when people are constantly at me, they want it free or they want to pay peanuts for it. I sometimes find that insulting. If you were to buy a franchise, not a Mickey Mouse one like these cleaning franchises, but a proper franchise, a McDonald's restaurant, sort of Chips Away, anything like that, you will pay in the region of that to get that franchise. All right. And on top of that franchise fee, you've still got to pay the building, the staff, and everything with it. With something like this, what you get is almost pure profit if you know what you're doing. And that is why the businessman in Leeds wanted to speak to me, because he knew the value of it. All right. And I declined because I don't want the responsibility and I'm not an educator. And I could have wrote my own ticket. But when I declined and I explained the reasons as to why I declined, I was very happy to help him and speak to him. You know, he understood and he respected it, because business owners do know that, and they know that they don't give away their secrets. You know, I will help you and I will point you on your system, but mine is mine. And the reason why I say that is because trading is individual, and it's individual to every person. I have a good understanding of the charts and the markets. I don't talk in the same terminology as what the markets are portrayed because I'm not interested in it. It doesn't mean a damn thing to me. The only thing that means anything to me is that, how much I get paid. So when you're talking about lot sizes, when you're talking about all these different fundamentals and quantity easing and everything like this, I couldn't give a monkeys. I really couldn't. And you're just talking a language that you don't understand, driving yourself in knots and losing money. So stop it. So there you go. That gives you a vague idea of how much something can be worth. You know, and I know it gets into a bit of a rant every time. And I base that on 1 year's worth of profit. You know, whereas in reality it should have been 3. Trading, how do I do this? Right? How do I put this into layman's terms? Okay, say you want to be a plumber. All right. I have seen courses to be a plumber for 1,500 quid. And all they teach you to do is bend a pipe. And they give you a little diploma and say, thank you very much for your course. You're now a professional plumber. You're not. You're not even close. Would you get a job? No, and I certainly wouldn't let you loose in my house. If you want to retrain as a plumber, the education for that is around £20,000. Okay? And that will put you through your 3 levels of City and Guilds, and you will come out of it being a qualified gas engineer and a plumber. And then you will go on to earn probably £60,000 to £70,000 per year. All right? But the initial investment was £20,000 for your course. Then you had to spend the best part of 10 months of your life not earning any money to get that qualification. Then you need another year's outdoor practice on site with somebody who will take a chance on you before you can then let yourself loose. So can you see where I'm kind of getting at? Trading can pay you 3 times more than what a plumber will get. All right? But it's perceived that you will get this free because it's just pressing a few buttons on the screen. Okay? So that's one way of looking at it. Another way is if you want to be an accountant, it's just pressing buttons on a screen and it's just putting numbers on a spreadsheet. But it's the only other job for a business owner, this is, that if you get wrong, it costs you money. Because if you fill in your VAT return wrong, you then have to pay more money out than what you should be getting back. If you file your tax returns late, you get fined. If you then make a balls of that tax return, you end up paying more tax. So it's another job that if you get wrong, takes money off you. It's the only other job that does that apart from trading. Because trading, you get it wrong, you lose and it costs you money. All right? But could you be an accountant? No. If you wanted to train to be an accountant, it cost you a fortune. But you seem to think that you can get your green Lamborghini.
You ding-dong!
Give it to me again.
You ding-dong!
Yes, I got another one in your mansion by watching a YouTube video and thinking you're going to be the Wolf of Wall Street. It's a professional career. And you need a professional approach and you need to know what you're doing. And if you haven't got that skill set, trading is not for you. And if you fail because you've been a complete fuckwit and not followed the rules, blame yourself. And that's it. And I can say all of this because I'm not an educator. And I don't care whether you win or lose. It doesn't affect me. You know, it's not a business that I have. And then when I get accused of sort of various one thing and another, and especially sort of the one-to-ones that I do, you know, saying it's overpriced and one thing and another. It's a marginal price to filter out fuckwits. And in fact, I'll probably put the price up to filter out some more. Because I'm not an educator. So, sorry for the rant, boys and girls. Let me calm myself down. We'll go back on the screen. And I'll answer some questions. And, I think I'm getting a visitor. Hello? Oh, I thought you'd bring a coffee. Oh.
I'll go and get one then.
That was terrible. I genuinely thought she was getting me a coffee. And I was actually excited.
I want to see Grandad.
Alright, well, say hello to everybody. What a rotten cow. Right? So that's proper put me in a bad mood for the rest of the afternoon.
You can come with us.
you can make the coffee while I put Star Wars on. Sorry, boys and girls, that was a little interlude into the rant. But seeing Winky come up them stairs always cheers me up, because she is the love of my life. And now I'm going to answer some questions about the DAX. And I hope you understand why I had that little rant.
Okay, guys. So now we've had a little bit of a rant and a little bit of an explanation of costs, etc. I'm going to enjoy the coffee and settle down a little bit, because we all know Scruffy likes a coffee. And I'm going to answer the questions that I mentioned. So it's a little shout out to Fred off YouTube and also Black Duck off the forums, because they both asked the same question. And it's a valid question. And they both asked the same thing. Why didn't I try and catch the downward move that I identified when I was going through the trade? Well, there's a very good reason for that. And my dear mother, a long, long time ago, used to call me the Winslow boy. And if you're unfamiliar with the story, the Winslow boy is a very famous book. And it's about a father defending his son. And he believed he was right, so he risked everything because he was tunnel visioned. Now, I am like that as a personality. If I believe I'm right, I will stick with it constantly. And in trading, that is a double-edged sword. You either die by the sword or you live by the sword. And what I mean by that is you're either going to cut your enemy or it's going to cut you. All right. And with this, I had a premise of long. And once I've made that decision, I stick with it. You know, I don't chop and change the decision, because I think that's the road to ruin. So when I was analyzing the chart, as you saw, the first filters that I put on was the 200 EMA and the 89 to get a direction bias. And I started with the hour, but it was conflicted on the 15. I then looked at the 4 hour, and the 15 matched the 4 hour, which gave me a premise of long. So that was the idea. And because the 4 hour is quite far away from the chart that I was going to be trading on, which was the 5 minute, I had to rely on reading the chart. But up in my mind, it was going to be long. And what I identified was going to happen, it did, but it went a little bit further than I thought. But I knew what was going to be coming, and I'll show you. So initially, we thought it was going to be down because it was below the moving averages. So if I drop those moving averages on, just so you can see, on 89, change the color, just so that you can be identified quite easily. Okay, and if you remember, that's what we saw. Okay, so the premise was going to be down. You know, we're going to go short based on this. However, based on the structure, it was quite overstretched, and it's clearly going that way. So you've got to be a little bit box clever, and you only want to be trading the dominant trend. So the dominant part is here, because you can see it's been moving up for quite a number of hours. If this was on a 5 minute chart, I wouldn't care less, right? But on an hourly, it has a bit of weight. Then I dropped it into the 15, if you could remember, and we'll move it back across, and there it was. The price was above, so it conflicts. So I have to go out further to get a confirmation bias. So you go out to here, and you can see clearly that's a steady move up, and it looks like it's going to be rattling the 50% retracement of this leg, which is not out of the ordinary. And also it's Friday, so all of these cells across the week are going to be closing off, which will force the market up on a Friday. Because if you remember from some of my other videos, I don't like to trade a Monday and I don't like to trade a Friday because the wildcard days. You can't get a full judgment. Okay, so that was the first part. And also, if you look to the left, because we might deal in the here and now, the hard right, but the clues come from turning to the left, there's a major turning point that it's working its way to. Okay, this area here. So that tells me it's going long. All right. So you take it back into your trading chart, which was here. I'll just get rid of these moving averages because I don't really need them anymore. And we start looking at what we're going to trade. Now, I traded on the morning. There's the double top. There's the sell-off. And if you remember, I marked it. That went to exactly where I said it would go. Went back to the level that I said it was going to come to. And I was expecting it to break through. However, I had it in my mind that it may come back further down to rattle this area, which was the other mark that I put in. And it fell straight through it. So I know you'd be thinking, well, why do you do what you do? I could have caught some pips here, but it wasn't enough. It was too close to a solid turning point to make a judgment. And the last thing you want to be doing is buying into a support and resistance zone that it can bounce off. You want to see it break through. And it didn't, which is why I never took that trade. So I was waiting for it to unwind, and it did. And there are two very famous sayings in trading, and this applied to both. You never try and catch a falling knife because you're going to cut your fingers. And that's exactly what that would have done, because my premise was up. If I come down and that decided to turn up, I'd be on the wrong side of the market. I didn't fancy that. And the other is a micro dead cat. And that's exactly what this is. It came shooting down and went shooting straight back up. And again, you do not want to be on the wrong side of the market on something like that. So the premise became, we're still going long, but we're going to scalp as it goes up till the engine starts ticking and starts rattling up. And that's what I did. So I was looking for that wave, which I caught that wave, and I caught most of that wave. All right. These bits, as you can see, were just sell-offs. They weren't the dominant trend. And if you scroll this out, you'll start to see that. So there's the bigger picture. Just get my bobbly head out of the way. Okay. So there it is, double top, sell down, and then wallop, up it came. Now if I put in my orders up here, dead in the water. I'm on the wrong side of the trade. If I can get my orders in down here, that would have paid me. And if I could get them in down here where I did, it will pay me very well, which it did. Because if you remember, I set my target at £50 and I pulled out just say under 200. So 4 times what I initially set out to do. And it was by reading the chart and sticking with my original conviction. But this is where it becomes the double-edged sword, because if that was a reversal and it was going completely the wrong way, I'd have had it, you know. But that is why you saw down under here the red box. That red box would have took me out of the market whether I liked it or not, and that would have been game over because I needed a hard stop. But the hard stop was in the logical place. It was under the second structure point, because if you're looking up here, down here is your first one. This section here, it's pretty wide, but it's kind of here. And the second major one was there, and that's why the red box was down under here. So when it was here, I'm thinking about what's going on. I can see the turns by the long wicks, and the short bodies coming in, as you can see, there was a lot of them telling me that it's moving this way. Kept an eye on the RSI, etc., just so that I can get a momentum pulse, and it paid off. And that's all trading is. It's just putting the clues together and making an informed decision. If you get it right, result. And if you get it wrong, well, you take your medicine and you learn from your mistake. But experience tells me once you've made your single direction, you stick with it. If you try to catch that, you're on a hide into nothing, you know, because eventually the market's going to turn and it's going to cut you into ribbons. So that's why I didn't take that sell drop. I never buy into a falling knife. I certainly don't want to be buying into a dead cat. I'll be waiting for the bounce, but I ain't going to try and catch it when it's falling. Trading is not difficult. It really isn't. You just trade what you see. And what you need to work on is yourself, your mental game, if you like. Because too many people, they try to catch every wave and you can't do it. So remember some of the things I've said before. Just look for the crumbs that the big boys leave behind and you'll be fed. All right. And that's all I do. And it pays me very well. Okay. So I'm going to leave it there because it is Sunday and I'm going to now enjoy Star Wars Sunday with another cup of coffee. Might even have a beer. And Cousin Jack might come over later on as well. So Sunday is a good day. And I hope that kind of makes a bit of sense. Anyway, still happy, still kicking, and I still don't give a stuff what those who kick it into me think. So there you go. Remember, guys, do what you love, and the money will follow. See you on the next one.